Ready? Okay.
Oh, good. Okay. So now we'll move to session two. We had a very stimulating panel one. And I think session two is also highly correlated to session one. So it's almost like a continuation. Here we'll cover how governments in Asia have rolled out massive monetary, fiscal stimulus packages and policies and to the situation. We'd like to understand the nature and style of these responses, the positive and negatives, and draw useful learnings from these policies, especially from the Asian perspective. We are doing this as part of a business school and Asia Bureau of Finance and Economics Research. We should focus on Asia, so I hope the panelists and your questions could focus on Asia. We have Bert Hoffman, Professor Bert Hoffman, practice professor at the Lee Kuan Yew School of Public Policy and director at NUS's East Asian Institute. Bert was also formerly the World Bank's country director for China and held many senior positions at the World Bank before that. Then we once again have Professor Sumit Agarwal, Lau Tak Kwong Distinguished Professor in Finance and the head of the Department of Finance. Professor Sambe Kim once again kindly consented to serve on this panel, practice professor in strategy and policy, and the former chief Asia economist at Goldman Sachs. And finally, we have Bernard Yong, Professor Bernard Yong, Stephen Riyadi Distinguished Professor in Finance and former Dean of NUS Business School and President of ABFER. I'll ask, once again, it's the same way. We'll have panelists give 2 to 3 minutes of opening remarks. And because Bert has not spoken before, I'll give him, at least that amount of time. And ask the other panelists to perhaps be a bit more succinct. And we'll go through a discussion right after each one gives their opening remarks. With that, Bert, could you please go over Asian macro matters at the aggregate with a focus on China, your expertise, or ASEAN? And with that, please go ahead.
All right, thanks. Look, thanks for having me. And the first panel was really very good. Now, of course, I want to start with a couple of remarks. First, this is a very big shock to the economy. There's no question about it. And whether it's bigger or smaller than the global financial crisis, we do not know yet. The first estimates are now gradually coming in. Is a major shock for China from almost like 6% growth to what we estimate 1 to 3% growth. 2% growth is probably sort of going to be the consensus for now. The world from a positive 2.5% growth to something of a negative 1.5% growth. So if you really want to say how big is it, well, 4% of global GDP, which is like $3 trillion shock, as we have calculated now, and that implies sort of everything goes well after this. Interesting enough that it was as big as the damage that Bill Gates estimated for a global flu pandemic. But it's not a desperate situation. So it's a very big thing, but it's not a desperate situation for 2 reasons. One, we actually know what needs to be done on the health side. It's going to be tough, it's going to be difficult, it's going to be varied from country to country, but we know what needs to be done. First, suppression, because we're too late, and then go to a situation of monitoring and to prevent this second wave that people are talking about. And meanwhile, the toolkit for the economy is far clearer, and that's what we've learned from the global financial crisis. And the situation is different from the global financial crisis. I mean, I lived through it. I was a policy advisor, and at some point and if you read all the policy makers, their memoirs, at some point we just didn't know what to do. The Hank Paulsons of the world and the others, nothing worked. And even the biggest bazooka did not work. That's different now. And the toolkit is much clearer, it's much more, also much quicker response. Mind you, the G20 response, the G20 leadership response that just concluded, came 2 weeks after WHO declared a global pandemic. And it came up with a very big bazooka, $5 trillion, so bigger than the economic damage, $5 trillion pledged in, well, whatever commitments there are. It's still quite unclear what exactly it is in detail. Politics far clearer focused on, yes, we need to do something. The United States is going to approve $2 trillion in fiscal support. It was impossible during the global financial crisis. So there's some lights, some points of lights, if you want, in this situation. Specifically, what is the toolkit? Well, again, the very first focus for any country is the health sector. Get all the supplies as possible, and that's where fiscal policy has been focusing. The broader monetary fiscal mix after that has really three aspects in my view, and that is keep companies alive. First order of business, keep companies alive. There's a huge issue with basically if you say everybody stay home, then indeed the bankruptcies are looming and a lot of companies don't have any cash flow anymore. Especially small and medium enterprises, they run out of cash very quickly. So this keeping companies alive. Countries in East Asia, China, but also Japan and Korea, who are actually less affected by the economic stoppage. China has an economic stoppage. Well, they target very much this keeping companies alive. Second, protect people, in part through companies. And China was very simple, straightforward. They told companies, you keep people on the books, and then we'll deal with the cash flow. That didn't happen for all, and especially the migrants is an issue, but a lot of urban workers, they're still employed, they still get paid, their companies are running into trouble, and they go to governments for support. Not a bad solution for a situation like this. So protecting the people, increasing safety nets, getting subsidies out there, getting subsidies to people to buy stuff, food coupons or consumption coupons is becoming up. And then third, and that's only just starting, third is really restarting demand, the big fiscal stimulus. And that's where I think people are still debating how much is necessary. And that's where in the first panel, there was quite a negative view on China. I think China has pledged this far about 3% of GDP in support. And if you look at Japan, it's about 6% of GDP, Korea, around 5% of the GDP, in that order. But that is only thus far. So Japan just came with a number, which is an unimaginable number, of 60 trillion yen in support. That's 15% of GDP. I don't know how to understand this. This can't be all fiscal, but it's probably a mix of fiscal and monetary. We don't quite know how that's going to work. But in other words, you can only start talking about doing a big fiscal stimulus once you have this first phase of closing down the economy and keeping companies alive. Once that is done, and then you can start saying, what are we going to do now? China has thus far pledged about 3% of GDP in a mix of fiscal and monetary support, and they have announced that they will do more. How much more? We don't know yet. The Politburo has just met on a plan which is called a new infrastructure plan, which was already a little bit in the making ever since December. Now they're saying, okay, we're gonna do something this year. And there's big numbers attached to it, 8 to 10% of GDP in spending this year. How much new spending that is, unclear at this point in time. But it's not that nothing will happen. What I do agree with Chang Fu is that for China, it will not be this completely debt-fueled approach on infrastructure and on real estate, which helped very much during the global financial crisis, because the debt levels are now a bit different. At the same time, currently interest rates are very low, not just for China, but for many countries that have reasonable credit ratings. So the overall cost of any fiscal stimulus is not going to be that high. Even more so in Europe, even more so in the United States. So if in Germany they've finally given up the black zero, as they call the zero deficit policy. And they should have. Their yields on government bonds is minus 0.6%. So why not sell bonds, get money for it, and then invest in infrastructure? Because it's not going to cost you anything. As a German, it's going to cost you very little. As an American, 0.6% on the 10 years. So a tremendous time to boost demand. But when that will happen remains to be seen, because everybody's still at home locked up. It's not a right time to start a stimulus. Let me stop here and go for questions and answers later.
Thank you, Bert. I think your points juxtapose nicely with Chang's. I must say, though, that what surprises me is even countries like Malaysia spend 16%, Singapore about 11%, US close to 6 or 7% of the GDP. China has been a bit slow, and you mentioned how quickness or speed is important to get things going. They've taken care of the healthcare for the largest part, the healthcare part. So now it's the economic recovery. So I'll leave it for discussion later. So my hope is that China starts getting its policies in a much larger magnitude up soon. But we'll come to that later, Bert. Thank you. Let me go to Bernard. And Bernard, maybe you can cover the ASEAN, Singapore, which you're familiar with, aspects to continue on what Bert said, if you don't mind, Bernard.
I don't mind, but I thought that it was Sumit who cover ASEAN and India.
Okay, well, Sumit can do India and ASEAN. Okay, go ahead, Sumit. You can do it if you don't mind.
No,
Are you
Bernie,
okay?
please go ahead, Bernie. Take it on, and I'll take over the leftovers.
Maybe I will focus on Singapore, and I also see that there's a lot of similarity between Singapore and Hong Kong. These two economies were really hard hit by the SARS in the past, and they learned from their past. So in Singapore, let's think about the steps that the government has taken. It's really a combination of sensible public health policy and economics policy. On January the 2nd, the government already forewarned us about what's happening in Wuhan. And then later on in January, for those who are working in NUS, we know that we're already talking about leave of absence and distance classrooms, separating into multiple teams, and I try to practice on working at home. And then on February the 7th, the government upgraded this to the DORSCON, the disease control mechanism. And what you can see is really a lot of very careful, well-planned ahead public policies, and give us the forward communication on what we need to pay attention to. Then let's go to the economic policy. The government has revised this estimate 3 times on economic growth from 0.5 to 2.5%, down to -1 to 0.5%, down to now -4 and -1.5. The government very rapidly and very precisely and very carefully work out the economic outlook. Then you think about the fiscal policies. It started with a -6.4 billion that Deputy Prime Minister Han announced in February. And then just about a week ago, the government, the Minister of Finance, topped this up by another 48.4 billion. This 6.4 and 48.4 add up to 55 billion that Bert just mentioned. It's 11% of the GDP and is half of the government budget, all catered towards dealing with the crisis. So the government understands the medical impact and the healthcare policy impact. Sorry, I misspoke. The public health policy impact and the economic impact. And the fiscal policies can be divided into resilient program, which is to save jobs, support workers, protect livelihood, to help business, and also the economic and social resilience, which match previously the plans on stability, support, care and support, and also helping the frontier. If you look at all this, it's about money to the frontline industry, including the medical care, money to the industries that hardest hit small business, and including things like tax profits and lowering the rent and supporting wages, reducing unemployment. To citizens with direct food coupons and cash handouts, and also for the self-employed, that I understand that they're able to get about $9,000 and so on. And then there's a lot of plans to support the corporations. As well, there exists a lot of plans on for people like ordinary people, extend to help them out on the mortgage, to help the SMEs on the loans, and also to assure that those people with the life insurance and health insurance program, they can still get coverage. This is really a very coordinated fiscal policy with policy target at the groups that really are hit the hardest. When you look at the monetary policy, 2 weeks, less than 2 weeks after the new fiscal budget came out, the Monetary Authority of Singapore come up with the monetary and finance plan that really is about helping us out on the mortgage, on the health and life insurance and loans, and so on and so forth. What I appreciate, I would say the following. A, the well planned ahead on what the public health issue would be like, and what the measures that we all as citizens and organizations need to adopt. The second thing is that I appreciate the full-fledged coordination and rapid adjustment as things evolve. This is exactly how you deal with uncertainty. Then the second thing I appreciate is really the focused policy instruments aimed at the right target. For example, the self-employed. For example, the citizens receiving low incomes and how we help them. For instance, helping out on the possible unemployed. For instance, helping out on the graduates who are seeking jobs. The third one that I appreciate very much is that Singapore has the reserve. And this is an amazing thing. The government is telling us that it is going to use its reserve, activate its reserve, to enact a social insurance program to allow us to have the future to cover the shortfalls currently. This is exactly what the state needs to do when you have a natural disaster. So you are using your future resources to deal with the current challenges. And the fourth thing that I think Singapore government has done very well is the steady communication. There has been studies that show that there are multiple regions, and Singapore, among all the regions in Asia, is the one that communicate often, but most steady and cause the least rise in anxiety. So I wrap up. A, forward planning, quick adjustment. B, the coordination. C, policy instrument for policy targets, exactly what an economic textbook would suggest. And D is about understanding that we are in a situation where protecting the citizens from a natural disaster. It is social insurance. And number 5 is the effective communication. I hope that all this, the rest can learn. And by the way, this is not just Singapore. I can see many other countries, including, for example, countries like Vietnam. They are doing a lot of similar things. They are assuring what we can do to help the citizens to weather this public health crisis. Thank you.
Okay, thanks, Bernard. We can leave this for the discussion, but I just wonder if Singapore can do a bit more in reaching out to the ASEAN countries like, Indonesia and so on, to help them in their crisis. But we'll leave that for a different discussion, maybe later on. Let me ask Sumit to basically give his thoughts on Singapore and the rest of ASEAN and India as well. Especially Sumit, I'd like to bring up the point that Bert brought up earlier about the importance of protecting jobs, people and companies. So I know you've written the media a lot about protecting jobs as the first best way to go about in support policies. So please share your thoughts on that, and India as well, what they're doing right and what they're doing wrong. Thank you.
Let me start out with the following thought. I think we have a lack of imagination as policymakers around the world to this crisis. Let me step back and go back to 2007 financial crisis. The crisis happened. The US policymakers, politicians, started out by saying this is a small thing, it's a subprime crisis, it's only $1 trillion market, nothing to think about, nothing to worry about. It kind of evolved and it became a full-fledged mortgage market crisis and banking crisis, and they were still downplaying it. If you talk to Europeans or Asians, they thought, oh, this is an American problem, we don't need to worry about it. These subprime mortgages, I don't know how they even give out these mortgages that are 90% LTV or 100% LTV. But it showed up on their shores, and they just didn't know how to deal with it, either through monetary policy or fiscal policies. They were scrambling, and they were literally scrambling. And we saw a prolonged impact of that around the world. It took us many years to come out of that. Come to the present, again, the COVID-19 started out in China, and most countries were very slow to think about this could ever end up in their country. I mean, India didn't imagine that. They said, oh, we have 4 cases, 7 cases. The same thing what Trump was saying all along, we have 1 case and we have grown to 15 cases now, or now we have 60 cases, this is not my problem. And as a result, they just were not equipped, one, to deal with the health problem, but then second, to deal with what kind of packages or policies they will need to institute to deal with it. India, for instance, has come up with very meager monetary fiscal policy packages. We don't really understand how monetary policy transmission takes place through the banking system and eventually impacts the consumers or the small businesses. They reduced their interest rate by 75 basis points. Now, how much of that will end up in the pockets of the consumers in terms of lower debt service payments in the pockets of small businesses? We don't know. Maybe 1/4 basis point will transmit, and then as a result, the lower interest rate may take a long time by the banking system, and by that time, the consumer or the small business is ready to declare bankruptcy. So essentially, the fact that they're only saying small kind of initiatives, they need to come out with a big bang kind of policy, which is, I think, what Singapore has done. Maybe Singapore learned the lessons from SARS and the financial crisis. Maybe Singapore is a small country, very agile. Maybe Singapore has huge reserves, and all of that helps them to think about this problem in a very big way. But large countries, which will be important, like China's response is also small. Bert talked about Japan, which is actually big. They came out with a package just yesterday, which is around 15% of the GDP. Now, that is the kind of package that we need for countries to give confidence to the consumers, to the businesses, and to the investors. And we have not really seen that as far as I can see from India. What I do see, if I go from ASEAN countries, again, Indonesia is behind the ball, Malaysia, again, Vietnam may have done, but it's a small country. It doesn't really matter that much. What really matters in Asia is if Indonesia, Malaysia, India, and China can step up. Japan, we already know they will, and they have. And Korea is still, compared to the size of Asian countries, it's not that important yet. So we need to see the larger countries to do and commit bigger amount of resources. So the resources have to be committed to help the consumers, to help corporates, large corporates and small corporates, and to also reform the bankruptcy system. So as to, we know there will be a wave of bankruptcies that are coming. Inevitably, they're coming. But to come up with policies that will say that, look, how do we deal with these bankruptcies? And we need to prolong the bankruptcy process, or we need to give the relief in bankruptcy courts to these people. That's the way to deal with it. And I just don't see it yet.
Okay, thanks, Sumit. I would like, given that both you and Bert brought up the GFC about the manner in which it was treated lightly, they were slower to respond. But as a result, they also did respond long term. And as a consequence, balance sheets and activity as well as responses were shored up. With that, can I ask Sanbay to just give a view of how do financial institutions, the big banks and the ones who are also tethering on the edge, how are they holding up to the crisis? Has the GFC experience and the requirements on the reserve side helped them work through this crisis better? Do you have any views on that, or anything along the lines of what anyone else said about policy?
I guess my short answer is so far they have not behaved better than one would have hoped. And I think this goes back to the issue that I discussed in the previous session, which is how the market grapple with risk versus uncertainty. And I would like to highlight that the the virus pandemic has been much more of an uncertainty as opposed to risk. Let me give you a bit of a personal background. I was working in the financial industry in Hong Kong when SARS broke out. It turned out SARS was a much deadlier, as far as we know at this point in time, a much deadlier virus, estimates of 10% or thereabouts mortality rate. But the markets basically were able to grapple with the SARS crisis, I think in a much more orderly manner. The markets did sell off, but the market behaved orderly in the following sense. There was a greater degree of possibility to handicap the risk with SARS. So you can kind of look at the risk in terms of two components. Let's call it a virulence index of a particular virus. One is a probability of you getting infected, okay, and the other one is the mortality rate should you get infected. So it's an expected probability issue. SARS, you could handicap that reasonably well, partly because those who got infected were readily identifiable. So this was a symptomatic infection as opposed to a large number potentially being asymptomatic, okay? Hong Kong at least had very, very transparent, updated data releases of how many people were getting infected. So if you kind of follow this probability, the risk, probability of infection times the mortality rate amongst those infected, you could compute that data on a daily basis, updated. And it turns out when the rate of increase in this particular metric started to crest and come down. So there was still growth in terms of infection and those who died. The rate of increase had basically started to abate. That's when the market really started to take off. So it was a V-shaped recovery, which the market anticipated, and indeed the economic data basically affirmed that with some degree of lag. So let me put that in the context of what's going on now. We cannot construct this index, partly because we don't have an accurate idea of what the probability of infection is, okay? A lot of countries are not still testing, including developed economies like Japan, to the same extent that Korea or Singapore has. So if you do not know the probability of infection, you also do not know the probability of dying from this disease, okay? So as I said before, without sort of some handle on this probability, the market was incredibly sanguine until late February, until it was not, then all hell broke loose. So that's a risk, I think, from a policy point of view. I think testing, in addition to suppression and flattening the curve, testing, and I emphasize random testing as opposed to testing those who are showing symptoms, I think is going to be really, really critical in terms of bringing into some kind of a proportionate response, I guess, in terms of policy. In terms of the financial market, the reason why I said financial institutions and markets have not behaved as well as one would have hoped as a legacy of the global financial crisis, for two reasons. One was you had basically in the last 2 to 3 weeks something that really, really is reminiscent of the panic and the scramble for liquidity in financial markets. And I would say in some respects, the scramble for liquidity was actually even worse, namely sell-off in safe assets such as U.S. Treasury bond. Even gold took somewhat of a hit as institutions were basically trying to raise liquidity. Okay, the government, particularly the U.S. regulators, had a playbook in place, so they've deployed these playbooks, buying not only government bond but also corporate bond. You had basically the liquidity crisis extended to the foreign exchange market. So the swap line arrangement that was set up during the global financial crisis, again, has been unrolled. But so far, we've basically seen the risk premium, the liquidity premium in the market come off the highs, but they're still at very elevated levels. So certainly not out of the woods yet. The greater risk, this is my last point, than the liquidity risk, I think is a solvency risk. It's very difficult to basically handicap this at this point in time. But one of the things that was sort of discussed in the marketplace is this virus crunch is going to be less debilitating than the global financial crisis for the following reason. The global financial crisis was a seizure in the financial system that basically resulted in the collapse in real economic activity. And the argument goes, this particular shock is a shock on real economic activity that is impacting the financial system. I really, from my vantage point, I really see this distinction as not being terribly useful. It doesn't matter where the shock starts, they're going to basically have a mutually feeding sort of reaction to each other. And I will highlight, I guess, 4 points on this. I think there is still substantial risk of some kind of an emerging market crisis. There's some $12 trillion estimated of US dollar borrowing in the rest of the world, including the emerging market. The second is the solvency risk at the corporate sector. We know that small to medium businesses are going to be impacted, but given the amount of corporate debt that has been built up in the wake of the global financial crisis, I think this is a non-negligible risk, and that risk is being reflected in the spread, both in the high yield as well as the investment grade bond. And the third risk is the financial institutions themselves are very leveraged. And this high degree of leverage now is being exposed by the collapse in the share prices, which is going to basically raise issues about the potential for recapitalization. Okay, the markets already, I think, start to discount some meaningful probability that the banking system will probably require some recapitalization going forward. The last point I will note is, given the solvency issue, leveraging issue, I think that's going to basically be a big factor in terms of how the landscape of the recovery is going to take place. It really does not argue for a V-shaped recovery when you have this debt overhang and potentially a significant part of that debt overhang turning out to be non-performing. So there will be a deleveraging headwind, I think, in a manner that you've seen in Japan. The global financial crisis is deleveraging in the household sector in many places, particularly the US. But I think this time around, this is going to invite or force deleveraging in the corporate sector, not only in the US, but in many other economies outside that.
Interesting you brought that up, Sanbei, because one of the things I'd like to talk about later is about how Asian corporates, GLCs, SOEs, etc., have been tapping into the USD offshore bond market, and that will definitely have an impact on their liquidity and solvency and so on. But we'll leave that for a later discussion. We have hands raised. But there's Johan on the line. Maybe we'll have Johan first ask his question, and then we'll move to Bernard. I know Bernard has a question as well. Johan?
All right. Thank you for the very interesting session. The comments are very interesting. I would like to talk a bit more about Bert's comment earlier, and also Sunbei's comment regarding what we have learned from the GFC. I feel that we have not learned much from the GFC in this context, because the GFC was not a health crisis. We're not learning anything about how to handle the health, public health issues from the GFC. We have the economic, the governments don't seem to have learned a lot from the GFC either, because even though they have the toolkit, they can talk about the toolkit, but the countries have done very different economic policies. I think Sumit has also highlighted the fact that it seems to be there's a lot of wrong priorities. Who should be kept alive? Is it the companies or the people? I think the people should be kept alive. Companies should be some companies should die out of this because they were inefficient to begin with, and this is just a way for them. This is just a way to weed out some of the weaker firms in the economy. Now, that doesn't mean that the employees should suffer. What that means is that the government should have some policies to distribute some stimulus directly to the employees without going through the firms. All right, so I'll leave it at that.
Do you have a specific question, or is just a more comment?
I just would like to hear more about whether we should save the people or we should save the companies.
Okay, anyone wants to take that? Maybe Sumit?
I'd like to take this.
Oh, go ahead. Yeah, Bert, yeah, please.
First, it's very clear that we've learned a lot about from the global financial crisis. All these facilities for the banking system, for the corporates, for individuals that are now online in no time. They took months and months and months of discussion, huge political controversies around many of them before they were in place. And now in most countries, they are in place. Second, this question of protect the people and protect the companies. There is a bit of a difference sort of across the Atlantic. I think by and large, what in Asia we're trying to do is indeed keep the companies alive, but not everybody will be protected through the companies, so you do something extra. The United States and Europe are quite different. In Europe, it's very clear, keep the companies alive, but subsidize the people, up to 90%, sometimes 100% of wage subsidies for companies that if they can show that they've been reasonably affected by the health crisis. Across the Atlantic, it's a bit different. You hit the 3.3 million of initial claims, but even there, a lot of them are furloughed. That's a term that I don't like, but it's basically, it's companies that say, well, you're still sort of on contract, but we're not going to pay you, and then you can claim unemployment. So you still have it tied to the company. Second, there's 100% up to a limit, 100% of subsidy for the wages that is available, and you keep your health care and other things. So there's a lot of protecting of the people, and it's a different way, as it was different during the global financial crisis. The US bounced back much quicker in terms of employment, even though the employment reduction was much sharper in the United States during the global financial crisis. They also recovered much quicker than Europe. And Europe, basically, it took a long time to have the full extent of the crisis hit, and then it took longer to get unemployment down. So those are different institutional ways. But I think the principle is now very, very different. Everybody recognizes there's an exogenous shock. And to use this time to say, oh, we're now going to sort out the weak from the strong companies. This is not the time. There's so much misinformation in the system because you have this complete exogenous shock. So this is not the time to say, okay, well, companies should go bankrupt because they didn't prepare well for a global health shock. That's probably not the way you want to treat it. So I think we've learned a lot. There's yet a lot to learn. And on the health side, indeed, it's interesting. David Hume comes to my mind. David Hume always said that you can only learn through your own experience, and that seems to be the case in the health response, where the Europeans and the United States are lagging so far behind the Asians because the Asians just went through, or recently went through SARS, and they're inoculated by SARS, so they have very much the correct response. Thanks.
Thank you, Bert. I know Bernard, you have a question. I forget now whether you're a panelist or an audience
maybe
member.
I'll just build on. I'll pitch my question, building along the line that Bert has pitched very sensibly and very effectively. This is an exogenous shock, and to protect public health, we have to enact policies. Their policies lead to the economic consequence that we see, and at the same time, if we don't, the economic consequence of the public health issue can be really large. And out of this, the government, the states are really dealing with an exogenous shock and is the protector and is the insurer of society. That's the mindset that we need to have. By the way, this insurers of the society is more than just about what's happening now. If we don't protect the society right now, people would not be as forward-looking as we would like them to be. and the society's long-run growth will suffer. It's almost the same thing like the climate changes and so on. All are along the same line. And now I would like to raise my point. You know, with the mindset of dealing with the public health, and we act, and it may damage the economy, and we need to be the insurer of the society. I think that in Asia, what we observe is really a more holistic approach. It's not department by department. Sumit talked about lack of imagination. I would say lack of holistic thinking and lack of coordination. And if you look at Singapore or China for that matter, you see that the more holistic and more coordinated country's policy making is and policy enactment is, the better of the country in dealing with this situation. And then the second thing is that out of this being holistic, the policies have to be having the right instruments to deal with the right target. This is time-honored thesis by the first Nobel Prize winner, Jan Tinbergen. Bert, do I pronounce the name right? But you know, he won a Nobel Prize telling us about the number of policy instruments and the number of policy targets they have to match. And I feel that the more holistic and the more varied policy instruments dealing with the varied targets, the better off the society become. Then I also want to say one more thing is, like if I look at Hong Kong versus some other neighborhood regions, the more united the government is, the more likely they're able to come up with something to deal with the situation, something effective to deal with the situation. And I think that is what some of our neighbors should learn from. And finally, what I find is that because of the holistic approach, because of the coordination, because of the target approach, and because of the scientific understanding of this pandemic, the government is able to come up with reassuring insurance, all with the mindset that we are the insurers for this, for you in this situation. Thank you. I would like to see if I get it right. I would like to ask the question to Sumit and to Bert. How can the West learn from these experiences, or maybe they don't have to? Thank you.
Bert, you can take that first, please.
Well, look, in a way, we are living in a little bit of a special time. The political reaction and the political circumstances in which this crisis takes place are quite extraordinary, and there is a certain, if you want, what the global financial crisis also did was an enormous skepticism towards expertise, a populism in a number of countries, and you see, if you want, the results of that now. The learning from experience is just in the last couple of days was a wonderful report done by the Trump administration on how to respond to a global flu crisis just last September. Absolutely great report with a wonderful scenario what to implement if and when such a thing would happen. But if the president is in denial and communicates completely different things, then it becomes very difficult to respond. Similarly, in parts of Europe, I wouldn't say in all of Europe, but in parts of Europe, this sort of, oh well, it won't be that bad, and we'll just go through this, is a reaction that was not informed by science, and I think that's what Europe can learn. That you know, no matter what the political color, there is still science to obey by.
Okay, thanks, Bert. Sumit, if you have anything to add on, otherwise I'll go to the next question. Oh, go ahead.
Let me make a couple of points.
Yeah.
So I think one response to Bernie would be that I think leadership matters. And Singapore has shown that quite clearly, that political leadership in Singapore has been very strong and very good. Whereas how should the West learn? I don't think the West is not ready to they are ready to learn, but they have very bad leadership. Look at America. I mean, they already know what to do. But if the leader doesn't care or doesn't want to respond, and he only cares about where the stock market is today, then it doesn't matter what we tell them or what the East tells him that this is the way to respond or this is the way to do. There's nothing they can do. Europe was already going through a huge problem with Brexit and the North and South divide, and the Germany putting all the bill for the Southern European countries. So they already had lots of internal issues to deal with in the EU. And we saw when the crisis happened, they couldn't come together. They couldn't come together to rescue Italy or to Spain. And now as the virus spreads north, they still don't have a coordinated policy to deal with the health part. They may have a coordinated policy to deal with the financial part of it. So I think there's nothing we can teach them from here that will make things better there. They'll have to just figure it out as they go along.
Okay. Thanks, Sumit. Leadership is critical, and we're seeing a lack of that in many parts of the world now. Let me go to the next question. I know Wena has a hand.
Joe,
yes?
sorry, I want to add, it's the leadership and also
Quickly,
the mindset.
but not, yeah,
I'll be very
because
quick. It is more than just, I agree with the leadership, but also think that we need to think about the mindset of the people leading. What are they after? What's the accountability? What's the objective? Are they ensuring the society and paying where the hurt, where the damage is? All this they need to think about.
Okay, thanks, Bernard. Can we go to Wena? I think she has a question about prioritization of the tools we use. Wena, can you ask a question aloud, please?
Okay. Yeah, thank you for the opportunity to raise my question. So I have already posted in the chat group. So my question is linked to early question raised by Johan, is that since we are here at the discussion from academic perspective, what would be the ideal recipe that the panelists could provide to consider about the priority of the financing support to give to the various parties? For example, healthcare sector, or the corporates. We know that the big corporates may still be able to borrow from the capital markets, but the small, medium enterprises may be very heavily hit. And the third part is the household individuals. And I know that this could be a very broad question, so maybe we just focus on, at a different stage of this pandemic development. Right now, if we look at China, seems like they should be shifting more to the corporate sector, but how about, the lessons from Singapore and Hong Kong? What can other Asian countries learn from, the best practice so far, as panelists pointed out, that has been done by Singapore and Hong Kong?
Oh, okay, Wena, thanks. Who would like to take this question about prioritizing or targeting the support for the different segments of the economy? Households, corporates, healthcare. Anyone wants to take it?
Let me start out with and let others jump in.
Okay.
I'm not sure. I actually disagree with the premise of the question. I'm not sure we need to make a choice. The economy is so integrated that we need to help all three of those. Small businesses clearly need the help, and they're integrated. A lot of the small businesses that are being hurt, they will be doing supply chain to the healthcare sector. And a lot of the consumers or the individuals we are worried about are also integrated to the healthcare sector. So I think we need a holistic approach, which is what I think Singapore has done fairly good at trying to cater to all the sectors, talking about households, talking about SMEs, and talking about specific sectors, specific packages to tourism, to hotels, and to airlines industry, and to the healthcare sector. This is the time when you need to dig in and take on additional public debt to take care of a crisis like this.
Okay,
I would totally agree. I would totally agree. Like I said multiple times, we need simultaneous approach. We need to deal with them all. And Sumit has already said it. So I'll just add one more thing. Sometimes we talk about priorities and so on is because we are divided. Different people have different objectives and different priorities. And so they compete to have what they have as the top priority. And in this situation, we need a simultaneous approach. We need to deal with everybody all at the same time, and we cannot be divided.
Okay, I think Vena's question is because we all know we face a resource constraint. So sometimes some prioritization is important, but that's okay. I think your answer's okay. Let me go to Jin. This is going to be the last question. Jin, please go ahead, unmute yourself and ask your question. And this will be the last question. Jin?
Oh, yeah. Okay. I'm not actually, I'm trying to provide my input on this solution part of it. I think what we all have to recognize is the modern society or economy is full of contracting relationship. Okay. So if, the solution that I think is better solution is to have literally a state order, very much like a bankruptcy protection. In other words, we freeze all the contract, like a rental contract, anything. But it's a ripple effect through the system. So then once you sorted out those kind of ripple effect, then you start to assist the party you need to be supported. Okay, in Singapore, I give you one example. I would say Singapore Airlines definitely to be supported. But the Singapore Airlines has such involvement in various supply chain. So if Singapore Airlines is supported by provide financial assistance, it's very different from the asking all the contract essentially being frozen and examine the consequences through the contracting. I think that would be much more effective assistance program. You know what? I think there are only two principles in my mind. Is individuals should not go starve. So some social assistance to them, and they should not have to pay rents and those kind of stuff. But then as the landlord is going to have a financial problem, right? The capital land as a company, for instance, will have a financial problem. So I think from bottom up, reacting to contracting situation is much better, because if we don't respect private contract, we're going to have a chaos. For instance, if we don't respect private contract and by directly provide the financial assistance to Singapore Airlines, example, it wouldn't be very effective because you don't know how much money will need it. Okay, unless you really sort of start from ground up, knowing individual had to get paid or they had to get money to pay for grocery. Those issues had to be addressed. And so basically, like a state order of all the contract is temporarily being suspended. And we sorted out the system. And they are international and also domestic, because the court can reach in a domestic sense, you know, because it's a sovereign. But beyond, there's also international contract had to be dealt with. So I don't think the kind of high level discussion of we're going to support this sector, that sector, is going to be ever going to be effective. It's going to be just have a chaos down the road, because it's sound good in principle, but practically will not be executable. Okay, that's just my general comment. I think it's actually solvable if government want to deal with this, because you know, people's livelihood. Okay, private contract had to be respected, because if you don't respect the contract, business cannot conduct it later on.
Would anyone like to comment on that or have any parting remarks on the panelist side? Any? No? Okay. I would just say that I didn't quite understand fully some of the points raised, but one thing, I think it talks about supply chain effects as well. When you shut down a company at the top of the predatory pecking order, you have to ensure that all the channels below it are also supported. I think that's one of the things that was raised about supply chain. One example I read about in the papers was this company that manufactures gloves. More than 60 or 70% of the gloves of the world are manufactured by this one company. They were allowed to continue operating, but the problem was they had to cut production to like 40 or 50%, which is creating a shortage of gloves in the world, because the government forgot to allow the entire supply chain that feeds the factor inputs into the glove production process. Example, molds, as simple as molds. That company was shut down. So there's not enough molds to supply the glove maker to make the gloves. Things like that. I think what Jin was also talking about is looking at all the contracts and down the supply chain.
It's slightly different. I don't mean the top-down supply chain. I'm talking about bottom-up, because liability is more than just the contract. It's also a wage contract. So individual citizens need to survive. So we had to sort of start from that point upwards, bottom up to the whole process, through the whole process.
Okay.
I don't mean say you look at a particular company because you don't see the whole picture, right? We can suppose we support a company, say Singapore Airlines. So they pay the Singapore Airlines pays employees. So they can actually honor their rental contract, for instance. That's one way. Another way is to freeze the rental contract. Okay, then examine the consequences from the bottom and up to see it. Otherwise, the top-down supply chain is not going to work because you provide a company money to company, don't know how much they need. You maybe provide too much to them. Okay? Because ultimately, I think what we need to do is safeguard the vital structure we have, critical part of it. The other one is let citizens have a means to survive.
Okay. Well, good
Okay,
points. Bernard, you want to say something? Go ahead.
Yeah, I'm cheering on Jin Chuan's point. I think that, like, I'll start with, we are really dealing with a shock, and the government, the caring leaders, are trying to deal with giving money to frontline industries, to affected citizens, to industries that are particularly hard hit, and to save financial stability. But you raised the point about this will change the rule of the game. I think that's what is implied by Duan Jinquan's comment. And I think that if I look at the policies in many of the Asian countries, they are not talking about canceling the contract. They are really, just take NUS as an example. We do not change the contract. We just say that we give you a longer period of, for example, 10-year periods and so on and so forth, in consideration of the situation. So I think what they have is really prolonging the contract so that you can find the breathing gap. I don't know if I'm right, but that is my recollection of all the observations that I try to make. And then the thing that is important here is we have a crisis situation, a situation of emergency. We need to have emergency policies. But how do we change back to normal? Is a policy question that we all have to ask. And my feeling is that sooner or later there will be papers about what is the sensible way to implement a policy so that there would be sensible exit plans.
Okay,
Those
thank you.
policies won't change behavior.
Yeah, thank you, Bernard. I think, Bert, you want to have some closing remark. Am I correct? Or maybe a response to a point?
Let me make one closing remark, because Wena in the chat makes an elaboration of a point, and she basically says, well, what if this is going to take much longer? Bernard is thinking about exit, which we should, but I think we should also think about what if this takes much longer. The reason being is that Singapore can do all the great stuff, and they do. But if other countries don't, Singapore will continue to be affected. And then the question is, how long can you support companies? How long can you support banks? How long can you support people? And that's where the priority question may come up. So the first priority is still do the right thing, support healthcare, convince others to do the right thing, because it's going to be essential for the longer term. The level of support that is currently being promised, you cannot have for a very, very long time. And as such, you'll have unexpected events happening in the financial sector as a consequence at some point. So this pressure on others to do the right thing is as important as the measures at home. That's what I would like to have as my final word. Thanks.
Well, thank you, but thank you all very much. We have to end this. Unfortunately, it's been such a fascinating discussion. But the next panel, we have, I think, 1 or 2 panelists who have to teach. So we have to start that in about 10 minutes, 11:40. So I hope all of you will come back and continue the conversation. With that, let me thank all of you once again, panelists and audience, for your participation. We hope to see you at panel session 3. Thank you.